Welcome back to your home of hopium-free cryptocurrency updates. Of course, we cover Bitcoin and the real estate cycle, but there is no better cryptocurrency to receive info on that is hopium-free than ADA. The hopium of the bull market of 2021 left a lot of ADA investors absolutely wrecked. The hopium being ADA has to go to $10, $20, $50 per ADA. And now we're starting to see it again on the downside of ADA. You know, we're sitting at 60 cents, we were at 35 cents, and we're seeing a lot of people talk about $2, $3, $5 again. And they're forgetting the downside. But I don't want to throw a whole lot of FUD or negativity. We are investors after all. We are emotionless investors. Leave the emotions for another time. So let's dive into the ADA update for today, and of course the massive returns that we're seeing in our staking pool. So without further ado, smash up the like button if you really want to see more hopium-free Cardano updates. And of course, hit that subscribe button if you aren't already subscribed. I know 60% of you haven't hit it yet, so make sure you do that. And of course, hit the bell notification icon. Now, let's crack on with the first couple of things. We always have to cover some of the major pieces of market sentiment before we get into the charts of ADA. First piece here, crypto fear and greed index. Now, we're still sitting in extreme fear. Day after day after day, we're in an extreme fear territory. This has gone on for over a month now, so let's bring it back to 3 months. Now, the reason for this, or the reason we're looking at this, is to give us an idea of what to expect in terms of the overall market. Now, if we're just looking to buy crypto and hold it for the long term, you know I focus a lot on dollar cost averaging at the better or best times rather than buying all the dips. That's what a lot of people want to hear. They want to hear, tell me when to buy, tell me when to buy. And really, to make a lot of money, patience is the key to the game here. So the extreme fear has gone on since about early May. So we can see the 5th of May was 27, and we're sitting between extreme fear and fear since April. So eventually we're going to get out of this slog of extreme fear. But for now, it looks like we still have a little ways to go, but we are starting to see the market try to trend that little bit higher. The Bitcoin dominance is another important chart to watch, especially if we are looking to invest into cryptocurrencies, because while the dominance is going up, while Bitcoin is gaining more of the market share, that just means there is less to go around with cryptocurrencies. And so this is something that we track very regularly on the channel. Just looking at the dominance here and what it has meant over the course of the last 5 years, just looking at mega alt seasons when the dominance drops, or bear markets when the dominance increases. And at the moment, we're seeing the dominance increase. I've got a target to the upside of about 56%. So I still think there's a little more left in the dominance for Bitcoin, but that doesn't mean that there aren't good trading opportunities during the Bitcoin season. And I'll show you that on the ADA chart as well. The beauty about lower, much lower prices that are down 80, 90, 95% from their all-time highs, is that it gives us some really good trading ranges at lower prices, and the markets can bounce much harder than they can when they're at really extreme high prices, you know, all-time high prices. When they're down nice and low, it's very easy to get 100, 200, 300% if the market goes from 10 cents to 30 cents, compared to the market having to go from $1 to $3. And if you don't understand that, we'll look at that in future videos as well, but essentially just has to do with the market cap, the amount of money that's in the particular asset that you're trading. So we've looked at the market sentiment. It's not looking the greatest, so that just means that the market is still extremely fearful. Probably not going to see any major altcoin seasons, but I think we'll definitely see some good trading opportunities in the coming months. Bitcoin dominance is also showing us that we're not ready yet for major altcoin seasons. Total 3. This is all the cryptocurrencies excluding Bitcoin and Ethereum. We just want to see what all the market caps are doing in cryptocurrency. Now, this is predominantly made up of a lot of the stable coins, because we can see it's basically everything except these two majors up here. And if we add up all the top stable coins, they come out to about 160 billion at the moment. You can find those details here on CoinMarketCap or CoinGecko. And if we look at the other cryptos, not including the stable coins, So the current market cap is 420 billion. Stablecoins are about 160. That means the altcoins make up the rest of that. So give or take, 260 billion. And then the majority of that's going to be BNB, ADA, XRP, Solana, Dogecoin, and Polkadot as well. So that makes up about half of that. So about 70 billion for those few cryptos and about 160 billion for the stablecoins. So that's why we're looking at the total market cap here. What is going on? Where are people moving their money? So we can understand, are we going to see some sort of pumps in the altcoins as well? At the moment, we're finding a little bit of a support here at 400 billion, but again, the trend is down. It is slowing, so that's a good sign. Maybe we'll see some sort of relief rally, some bounce on some of these alts because, of course, they have been absolutely slaughtered. But to the downside and say a bigger picture, I've still got my targets here of approximately 300 billion, and then I'm going to look to something in the 1s to 200 billion. But I want to see how the market reacts to the next level down, which is about 320 billion, before we start to look too far down at around that 150 to 200 billion dollar market cap. I'm not sure whether we'll get there this time around because stablecoins make up such a large part of this, and we're probably not going to see stablecoins go from 160 billion down to 50 billion, unless, of course, something else drastically goes wrong, like UST and a stablecoin is just wiped out overnight. But for now, 420 billion, that's where we currently sit. If we look to the downside around 300 billion to a support level, that's at about 300 billion. So we could see 25 to 30% off the total market caps. That's giving us a price target for ADA, looking potentially around that 25, 30% off from the current levels, which we'll get to in just a sec. But I want to give you guys an update of the staking pool. The last time we looked at the staking pool, we're at Epoch 339. We're now currently at Epoch 344, and we've had some massive returns, very, very massive over the last few weeks. So they're every 5 days that you get an Epoch, and then these will come through in your staking rewards. So if you're interested to stake your ADA with a Hopium-free staking pool, somebody's going to give you my honest opinion, not blow you full of hopium that ADA is the next latest and greatest thing, then of course subscribe down here and check out the Investor Accelerator staking pool. Link to this will be in the video description. We're at an average above the 100% mark, so we're getting just that little bit more. We're getting 17% more staking rewards than the average. So that's great news for the staking pool. We're not oversaturated. We're just sitting comfortably in there, so people are all getting their rewards. And yes, some of them aren't going to be as high, but that's how the system is designed. You're going to get double rewards on this one, like 200 and something %, and then other times you'll get half the amount of rewards. So just staying steady with a staking pool, whether it's TIA or another staking pool, is how you're going to get a better average over time, rather than chopping and changing everywhere and then losing fees when you're moving in and out of staking pools. So that's what we're at the moment, 117% above the average. Very happy to see that. And the stakers are also, of course, very happy to see that as they're getting better rewards than the average. So we've looked at quite a few things at the moment. Let's look at ADA USD. Now we're at 62 cents. The low at the moment has come in at 38 cents. How much longer does this have? How much longer for ADA to be down? Well, I'm just going to look at some of the time frames that we've seen in the past. So from the previous all-time high to the low is at about 49 bars. So I'm looking at this in a macro picture. This is a weekly chart. So 49, nearly a year from the top to the bottom. But remember, from that bottom, the market ran up for 29 weeks, 337% just in that period. And then it came all the way back down, plus some, bounced back again. We broke out, had a retest of the old tops, and then we went away. So all the way to that point before we actually took off, and then we never saw those prices again. I'm using that at about November of 2020. So that's about 103 bars, almost dead on 2 years. And if you take it all the way back to where the market was at 8 cents, 9 cents, 10 cents in mid to late 2018, then that whole time frame to this point where it actually broke out was about 120 bars. So 100 bars is 100 weeks. So it's 2 years, 2 years and call it 4 or 5 months. So 2 years, 4 months is a long time for the market to be in a particular trading range and looking at returns trading returns anywhere up to about 300%. So that's the sort of trading ranges that are actually looking healthy to be trading while the markets are boring and down and sideways, compared to trying to trade a lot of these areas when the market is at all-time highs. So that's the chart that most people are familiar with seeing. This is ADA back during the bull market. July to that peak, it did get 200%, but you can see just in these trading ranges when the market is tracking across its lows, you get much, much bigger returns. And as a trader, that's what you want to see. You want to have some volatility. You want to have some big trading ranges so that you can actually just scalp some of that middle section. You know, maybe you're getting in at 4 cents, getting out at 8 cents is 100%, even though the trading range is 300%. You definitely want to see a big range and just take a little bit out of the range. And then, of course, you also have the downside if you're looking to short as well on these sort of altcoins. And I think this is going to go across the board for many of the major altcoins, which saw a lot of activity, a lot of volume during the previous bull market. So coins that were very popular are going to be great trading opportunities, especially when the markets come down that little bit further. So how much longer for this? Well, I think at least it's going to be a year from the top, and the top for ADA was around late or early September actually. So bringing it out 52 weeks, that's going to be August. So we're looking at August, September of this year. That's only about 3 or so months away. But I'm not saying that we would bounce from the next low and then just go into new all-time highs. I think that's pretty unrealistic to think that that will happen. I think we're probably going to get something more like this, an accumulation trading range where you've got opportunities to dollar cost average in over the span of sort of like a 300% range, or you could be trading it as the market heads up, sell some off, wait for it to dip back down, buy back later, because I do think we have a fair bit of time left, especially for altcoins, because like we just looked at, total 3 probably has to come down a little bit more. The Bitcoin dominance will probably have to spin over as well, tip over for the altcoins to have their season. Of course, Bitcoin is still looking reasonably weak, relatively weak over the entire market as well. So all of these factors will have to start to play in together in order for the alts to really build their position and then take off to new highs. So timing for me is more important than the actual price. I don't know exactly what price this will get to, but I have a better idea of the timing of the market. And I know a lot of people aren't interested in the timing. They don't think you can time the market. But if you just look at some simple cycles and just have a rough estimate of where they could fall, you're going to be doing a lot better than 99% of people who really don't focus at all on time. And the time isn't that difficult. It's much more difficult, I think, to get an exact price rather than looking at those time frames. So just looking at an approximate year down, then probably a year or two sideways within that trading range. If we go from the low to the breakout point, so I'm using this area of November, December of 2020, the breakout point, because that's when the entire market really started to take off. There was a lot of energy coming through there. That's about 104 bars, 102 bars. That's almost dead on 2 years from the low to the breakout. So you could use that 2 years as a dollar cost averaging area, as a trading range, to be then holding on for the next ride. And the ride up is less than that entire trading range. So just looking at where the market broke out to the peak, it's about 40 odd bars. So not even a year from the breakout to the peak. Now I'm using that as a breakout, as I said many, many times, November. And the reasons why is because of that energy that came into the market. It was really crazy through November 2020 before we pushed on to that first peak into the March, April, Mays, and then that second peak into September through to November. So that's why I'm using those areas there. So overall, I think we have a fair bit of time on our side for the low to come in, and then for the trading range in altcoins, so cryptocurrencies, altcoins. Bitcoin, I think, will play a little bit differently. Bitcoin will probably have to take off before the rest of the market, and you'll see that in the pairings as well. So this is ADA against Bitcoin. So even if we miss the breakout and the takeoff for ADA against the USD, the US dollar, as long as we've got some Bitcoin, then we're probably going to be able to capture some other low points on ADA against the Bitcoin value. You can see ADA BTC load in August of 2019, whereas ADA USD load in December 2018. So August was sitting somewhere in this period here, and the market kept going down and down and just held a trading range against the Bitcoin value because Bitcoin was taking off. So that's something to keep in mind as well. It might take that time before ADA BTC heads up as well. And you can see a nice trading range. The market broke out, came back, tested the tops, and then took off for its own bull run. So I think even if you miss the breakouts, there's always that opportunity. You often see at least one retest, giving that extra opportunity to get into the market. So you can see the breakout, then the retest, and then it went on for its bull market. So it gives you that opportunity to get in if you've missed the trading range, just that little bit higher. You pay the premium, and then you've got that bull market to come. So you can see that as well here. There's the trading range, a little bit of a breakout, the retest of the highs, and then we take off. So it gives you that extra opportunity. So patience is the game. I think there's some great trading opportunities as well. So if you are interested, check out the link to Bybit video. The link is in the video description down there as well. You can get up to $4,100 of sign-up bonuses. And of course, check out the Investor Accelerator staking pool if you've got some ADA sitting on the sidelines. If you're trading for bigger gains, selling some off, and then putting those profits back into some lower prices. This link will also be in the video description. Guys, not looking so bad. There is some time, there is some patience, good opportunities. I'll see you guys at the next video. Make sure you've liked and subscribed to the channel for your hopium-free cryptocurrency updates. I'll see you at the next one. Till then, have more fun to get more done.